Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for about the next 20 minutes here on Options Guide TV. Apple news hit that was good news about just in general about the tariffs. Not going to be applicable to mobile phones, these type of things. Looks like Apple's headwinds have been diverted a little bit. The stock has reacted accordingly, but it was up stronger today, and now it's only up about 3%, and that's just a normal trading day in this day and age. The SPX moves 3% on any given day, so it's not a big move to the upside. And more importantly, what I'm kind of surprised at, and I'm going to highlight this. Let's run to the Tradier Pro software. We did a long straddle around earnings, and the news event was the tariffs and what was going to happen with Apple's making of their iPhones, and how were they going to get the iPhones over to the US? Are they going to be paying a lot of tariffs? They rented a lot of planes to get everything out of China as fast as they could. And we were long a straddle in Apple. And right now you could have closed it out for a small profit on the open, and that might have been smart to do. I wouldn't have mind closing the call side of things. But right now, the position's actually down, which is kind of befuddling a little bit. We went at 195. The midpoint now is $20 and $20.25, and we actually paid $22 for the trade on Friday. Implied volatility has came down, even though we have earnings. Earnings is May 2nd. Our option contract, earnings of May 1st, and our option contracts expire on May 2nd. So this has not been the earnings report hasn't held up the volatility as I was hoping. Let's put it that way. And that's the only reason why we would be down on the position right now. We were up this morning, but now we're down at this point in time. So we're at 609. And if you look at the chart is also interesting in that we definitely had a breakout. So the position's not done. It's just disappointing that it's not profitable. I'd really like to be able to sell the call side and just stay long the put. But here's the trade that we did. I think I got a little bit ahead of myself. That we did on Friday. We bought the 195 strike call, bought the 195 strike put, May 2nd expiration, paid around $22 for it. That is now trading for $20.15. We paid about $10 for the call, about $10 for the put. And if we look right now at the call option, that's trading for $15. So you could just sell the call and let the put ride. And that would have been my intention if the call would have ran up and traded for more than the long straddle. So let's say $25 or something like that in that range. It never got there. So, but that would have been an ideal scenario. And I actually thought that might be happening this morning, but it did not happen. We are now up $6.25. Like I said, 3%. That's a normal move in this marketplace. It's still a very good move, and it's a strong move to the upside. As far as the chart is concerned, it's very interesting because we're in this gap. Here's where we started the breakdown, which in Apple was 221, and we're now on the high of this candle was 212. So a move to 221 would obviously help this out quite a bit if we did fill the gap. But we broke through this little area, would have acted as a resistance. This is where we had the gap down, got some support, gap back up, and now we're right here. So the stock is in a very interesting phase. We still have earnings coming out. We have a lot of earnings coming. Netflix is the first of the Mag 7. They're coming on the 17th, so they'll be the first ones to report. I also see Google's on the 29th. Amazon is on the 6th of May. Visa is on the 29th. So those are a couple of them that I had wrote down. Meta is on the 30th of April. So the earnings are coming. I do expect implied volatility to increase on Apple, but obviously everybody was anticipating this news event happening or something giving in the Apple space, right? Because billions of dollars were at stake. One of the great American institutions, one of the great companies, used to be the largest company for a minute or two in the U.S. marketplace, and so something was going to give, and it did. And now we're just not seeing the bump up that I was really hoping. Up $6 at this point in time. Let's see where our high was. If we go back to the chart, we ran all the way up to 211. Now we're actually down at the lows. If we finish down here, that's not good. It'd be good to finish above this area of support. And I'll zoom back out here a little bit. Right in this area, 208 or better would be a huge boost in the Apple space. And if we go further out in time, look at all the other noise that's right in this area, going all the way back to 2024. A lot happens between 198 and 209. So we really want this news event. Well, we did pop up above the 20-day moving average, but we do really want this news event to propel us up at least to this area. That's what I was hoping for, that we would fill that gap back up to the. And it's not like it can't. The news just came out. I just don't like the fact that that here we are at 11 o'clock and we're only up 3% on Apple. All right, so maybe expecting more news that may happen. We bought the May 2nd expiration because of earnings, wanted it to hold up implied volatility. Implied volatility still came off. It was at around 60%, and we're showing our IV right now at about 47. And that's the main reason why the trade isn't profitable overall. If you get a pop-up today, you can sell this for 20, which our delta on the option contract is right around 70. So for every point movement to the upside right now, you're going to get a good amount of upside on your call. So you get another 4 or 5 points. And like I said, it was profitable earlier today. Then you just close it out. I would close out the call side of things and let the put side of things just let that work. Might even ride that through earnings if you wanted to. It's hard to say exactly the impact of all the news that is going to happen on Apple. There's obviously going to be a conference call afterwards. I don't know if there'll be a forecast, if they'll be laying out their outlook, because it's kind of hard to tell. So I don't know if they'll give guidance in their conference call afterwards. Still a lot of news. Not that bad of a trade, but I'm sad that this is perceived as good news and we're only up 3%, if that makes sense. All right. Then we went and looked at an SPX trade. So in the SPX trade, we tossed this in at the very end, and I did still like that trade quite a bit. I'm waiting for us to move here. But it was in the wrong direction, right? The markets, the news today is perceived as good, and the markets are rallying a little bit, and we're going to get that. But we were trying to pay $2 for a put butterfly, bought the 52.60, sold the 52.45, and bought the 52.35, looking at $2 for that trade. So come on, I need you to move. Froze at this point in time. But I'll look and see if there is a potential. And then, of course, it moved too fast. Here we go. So we're up 1% in the SPX, and the VIXs came off. So we still got our VIX trade going all the way out to May, and the VIX is looking really good. That trade, I think we doubled down on it. 31 is where we are at with this trade. We got another VIX trade that's going to be expiring on Wednesday. That's coming up too. I need my option chain here. Okay, we can get that. SPX. Why can't I see my options chains? for the SPX. All right. Well, wanted to look at that adjustment. Well, let's look at the VIX trade real quick, Mike. We'll run out and look at the VIX trade that we have that's going on with the May expiration. And the trade that I wanted to look at today is going to be in Bank of America. We got earnings, financials, I guess a little mixed. JP Morgan was up and now it's down. But real good news out of Goldman Sachs today. We see where Goldman Sachs, how much that is up today. 2%. Once again, kind of a muted move on really good news overall. I do just think there's a lot of talk about even Goldman Sachs coming out and talking about a possible recession. And I think it's keeping, even though there's perceived good news as far as the tariffs are concerned, a little bit more of a kicking the can down the road on a lot of these major events that are going on, but the market just won't run. 2% is a solid move in Goldman Sachs, and I want to get bullish in bank today too, heading into their earnings. But let's really want to adjust that SPX trade. Why won't my chains come up? All right. The expiration for VIX that we got really short the VIX in is the May 21st expiration. We're short the 31s. The market's at 32. Let's see where the May expiration is at. Right about 27. So we are below. We sold the 31s and we sold the 30s and bought the 35s in May, and we're below the May expiration. We can actually see where that's at. Let's buy this one and sell this. Okay. There we go. 77 cents. So we put it on for 105. So we're up a quarter on the position. I'd have a limit order in to try to buy this back, and I would look to try to buy it back at about a quarter. If we put it on for $1.05, trying to get a quarter for this position would be fine, but the market's going in the right direction, going all the way out to May. I don't think there's any reason to be in a rush on this trade. Like the price that we got in at, and the VIX is coming off. I do think that just in general, volatility has to settle down. The news events or the news headlines have been fast and furious. I don't think we can keep up that pace, not going all the way out until May 21st, 37 days away. Hope things will tame down, and that's just a feeling of the marketplace. But we're going in the right direction here. I'd buy it back anywhere around 20 cents if I can get that position off. Usually, if you sell something for $1, if you can get about 80% of the premium, that's where you're looking to take the position off at, depending, of course, on market conditions at that point in time. If it happens sooner than later, I'd rather do it as we get closer to the expiration date based off of where the VIX is at. Then I would think about adjusting that trade. Let's go back, see if we can get into the SPX pit here. And no, we're not. Okay, so I guess we're going to have to punt on that adjustment. 54.23. The trade that we did was, and I'll just tell you what the adjustment would be, but I can't show it to you. Actually, we filled the VIX trade at 110, not 105. Okay, so on the trade, the adjustment would be to sell the 52.35s. Where did we end up at? 52.60, 52.45. So you would sell the 5260s and buy the 5245s and roll into a short put spread. You'd want to get that done for a decent net credit. I don't know exactly where we're at on it. We're up 64 on the day. If you could get it done for about $3, it'd be feasible. But I don't know where the trade is at. I'm just going to punt this. Let's move on. Sorry about that. I have no idea why I'm not getting those chains. Bank of America. Okay, Bank of America is going to be announcing on Tuesday. We're looking at implied volatilities on this April 17th expiration right up around 64%. Just want to lean bullish on the banks. I do think that Bank of America fundamentally has solid potential for some upside. So I just want to straddle the market and do an earnings play trade on Bank of America. Implied volatility is fairly high. So in this instance, I'm going to go a little bit in the money and I'm going to sell something a little bit out of the money. So we're going to buy the 36 strike call. And at the same time, we're going to look to sell the 38 strike call. And we're going to do a very short-term trade. We're going to limit our risk. We're going to go 2 points wide and we're going to pay $1 for it. So legitly, we're going to pay $1 to try to make $1. It's a 50-50 trade. Very simple, very straightforward trade. I think the numbers out of the financials are doing okay. Every day, everybody's drawn attention to what's going on in the 10-year and in the yields. The news a little bit about recession has tampered a lot of the financial stocks. I do think, though, that they're still going to have some strong earnings. So I want to get long a bank trade. I want to do just a 50-50 trade. We're going to pay $1 to make $1. And we're doing that specifically to make the risk reward equal in this trade. Just flip a coin. Is it going to go up? The potential move after the earnings report here is 65.50. So we're looking at about a $2 move. And so we're within the expected move. We're selling here the 30 delta, 28 delta to be more accurate, 27.50. And that's the probability of the stock actually finishing above 38. But this really is just a 50-50 bet. Either you make $1 or you lose $1, and that's a trade that we're going to put on. I'm going to send that down here. We're buying the April 17th 36 strike call, and at the same time selling the April 17th 38 strike call. Net debit of $1 to the account, and that will be our trade for this week. Sorry we're a little short, but I cannot get my quotes to come up in the SPX. So we could look at that adjustment on the trade. The option contracts expire on Wednesday. There's still a lot of room for potential movement in the underlying stock. We still got high implied volatility, so the adjustment might be there. And literally, you sell the 52.60 call and buy the 52.45 call, trying to get it done for a net credit to the account that will at least cover our net debit. And then in that instance, you would be short, one short put spread, wanting the underlying stock to stay above 52.45. And that is all that we have. I apologize for the not being able to see the SPX quotes. And that's it for today's edition of Options Guy TV. We'll come back on Wednesday. We'll see where the market is at. I'll go post the trade on Twitter. I'll get this thing running. I probably just got to do the old turn it off, turn it back on. And then I will post that trade and post that adjustment and see if it's feasible. I don't even know. It's got to be at least $3 or better in order to do this adjustment. We paid about $2 for the butterfly. So have a good day, and we'll see you this Wednesday for the next edition of Options Guy TV. Thanks for tuning in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.